Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute. Today, we're seeing equities just kind of consolidate, but as for the Russell 2000, it has extended gains. It is running into some resistance, though. We see that at about 22.27, 22.30. You got a trend line going back a couple weeks that's coming in there, and it's running into where it broke down previously. But for the Russell, it overall is sold off so sharply. It's a nice rebound. You have higher rates today, helping the banking sector. You got energies moving, helping energies, and then the overall reopening trade has been working well today as stocks in general rebound, and that's been pretty supportive to the Russell. But you look at the S&P and the Nasdaq; they're just digesting gains still, as well as the Dow, but very constructively, really holding the upper end of the ranges. The S&P previous all-time highs, that was a support level, and we came back and settled into that yesterday, but it really just holding out above that 44.75 area for the whole session. So digesting gains today. We move into Wednesday, and the Jackson Hole begins. Tomorrow you got durable goods. You have another 5-year auction. Today's 2-year was well received. Again, overall, it's just a nice, sharp rebound from that selling as expectations are mounting for a more dovish Fed for whatever reason. But yeah, that's what the market's pricing in now because, obviously, we discussed in the Morning Express. Going back to Kaplan's comments Friday kind of set a tone. He was supposed to be more hawkish, and now it's pricing in, what other dovishness we can get from other Fed members that are not as hawkish as him. Even though that China, fought out of this the virus for 30 days and crushed cases. You've seen the curve flatten in the UK, in Europe over 30 days. So what's to say that it's not going to happen here in the U.S.? I don't think the Fed members, the committee really should be too worried about it. But again, we're seeing the timeline extended out for where the taper is going to come. And that Goldman Sachs is one today that says not till November or December. Now again, I think you look in this meeting here coming later this week, and it could start pricing in the dovishness, which could lead to a potential hawkish surprise. So keep that in mind. Now let's move on. Energy, it's rallying. Crude oil, really nice rebound here this week. Traded it into a new low Sunday night, and then we closed outside on above Friday's high. Really good move. And this is what we've been talking about for the last couple of weeks. When crude, if it does break 65, there's a lot to lean on, and it came into a number of support levels that did work. We've seen the thing rebound. Obviously, news out of China certainly has helped. The weaker U.S. dollar has certainly helped, and the expectations going into the inventory data tomorrow certainly has helped. So we do have resistance. 68 and a quarter. If you did buy crude on weakness, you may want to look to capitalize that into ahead of tomorrow's report, because we'll probably see a 68 handle trade before then. And then as for the metals, the weaker dollar is underpinning the metals, precious metals. And then from the base metal side, obviously China, you're seeing a lot of big rebounds on different materials that are not traded on the CME, things like iron ore that have run pretty good here overnight. And you're getting copper going back to 430. So it's really, basically a nice 30-cent rebound, 15% move in copper over the last couple sessions. And then you got platinum up there too. But keep an eye on gold, keep an eye on silver. They're running into some resistance here. Gold, a nice little bull flag breakout, not any follow through today though. Resistance 1809, silver big resistance $24, 24.30. So you got a lot of overhead resistance here to look at. Does the dollar find footing? That would weigh on it. If the dollar goes lower, it could power these through resistances. And then as well, do the treasuries continue to move lower? There's no sign that the treasuries are going to whoosh lower at this point, but they are hanging a little bit heavy heading into the back half of the week, at a slight bit. Give us a call though. Our trade desk is here to help. 312-278-0500. Remember though, futures trading involves substantial risk of loss. It's not suitable for all investors.